Wall Street says buy Micron. The price target is $549. Melius just opened with $700 yesterday. But Renaissance Technologies bought 151% more last quarter. D.E. Shaw cut their position 63%. Same data, opposite calls. We pulled the SEC filings, the earnings deck, and the analyst notes. Here's the setup before April 29. Micron is up over 500% in 12 months. The stock just hit an all-time high near $507 last week and traded near $520 yesterday. April 29 is a Fed day and the last meeting Jerome Powell will chair. We mapped 5 places where the bull case and bear case are firing at full volume. Each one tells you what to watch on the call. Let's start with the loudest one. Micron CEO said something on the last earnings call that stopped Wall Street cold. Sanjay Mehrotra told analysts that Micron's guidance for next quarter alone exceeds the full-year revenue for every year in the company's history through 2024. Read that again? One quarter? Bigger than any full year before this cycle. The number is $33.5 billion, plus or minus $750 million. That's up from $23.86 billion last quarter. And $23.86 billion was already a quarterly record. The gross margin guidance is 81%. For memory chips, memory has historically been one of the most cyclical commodity businesses on the planet. Think about that. The same product that used to print 22% margins is now guiding to 81%. That's the bull case in one number. Now the question, is this sustainable or is this peak cycle priced in? Morningstar already calls Micron 81% overvalued on traditional models. Forward price-to-earnings ratio is 8.5 if you believe the guidance. It's 35 if you don't. The April 29 Fed day matters less for Micron than what comes in late June when fiscal third quarter actuals print. But the bigger contradiction is what the smart money did about it. 2 of the most respected quant funds on Wall Street looked at the same Micron data last quarter. Renaissance Technologies, the fund built by Jim Simons, increased their Micron position by 151%. They now hold 3 million shares worth $859 million. That's not a small bet. D.E. Shaw, another top quant shop, cut their Micron position by 63%. They sold 5.7 million shares. Both filings hit in February. Both teams have access to the same SEC filings, the same earnings call, the same supply chain data, the same HBM contracts. They concluded the opposite. JP Morgan also cut Micron 24.8%. BlackRock added 7.3%. The institutional split is unusual for a stock that has run 524% in a year. Most of the time, when a stock prints those returns, the smart money lines up on one side. This time it didn't. Why does this matter for the April 29 call? Because Powell's last meeting is the kind of catalyst that breaks ties. If the Fed signals a hawkish hold and the dollar stays strong, the bear quants get paid. If Powell hints that the Iran-driven inflation spike is rolling over, the bull quants get paid. The split positions tell you the market itself doesn't know yet. In April, Micron started mass production of HBM4. That's the next-generation high-bandwidth memory built for NVIDIA's Vera Rubin platform. 2 things happened at once. The throughput jumped to over 2.8 terabytes per second, more than 20% better power efficiency than the previous generation. And the price went up over 50%. That's where the 81% margin guidance comes from. Higher margin product, fully contracted demand, no inventory risk. Micron's entire 2026 HBM output is locked in under long-term agreements. The customers are NVIDIA, AMD, the hyperscalers. They cannot wait for cheaper memory. They have AI CapEx commitments measured in hundreds of billions, and they need the chips this year. Now the bear angle. HBM is roughly 30% of Micron's total memory bit production. The other 70% is commodity DRAM and NAND, which historically swings hard with the cycle. If hyperscaler CapEx slows, that 70% takes the hit first. So the question on the call isn't whether HBM is strong. It is. The question is whether commodity memory pricing holds while HBM scales. In the last 30 days, Micron's chief business officer, Sumit Sadana, sold $10.1 million in stock. CFO April Arnzen sold $11.7 million across 2 transactions. Combined, that's $21.8 million. $2 two C-suite executives selling at the same time into a stock at all-time highs. Now the nuance. Both sales were made under Rule 10b5-1 plans, which means they were scheduled in advance and not based on inside information they got that week. That's the standard executive playbook for diversifying after a stock run. So the sales are not automatically a red flag, but they're also not nothing. Executives schedule 10b5-1 plans at moments when they think the stock is reasonably priced. Sedana's plan triggered at $421, Arnzen's at $375, both well below the current $520 area. The plans were locked in months ago before the latest rally. So the insider sales tell you the executives wanted out at $375 to $421. The market took the stock to $520 anyway. The question on the call is whether the next set of insider plans gets locked in higher or whether the C-suite is quietly trimming exposure into a peak. April 29 is a Fed day. It's also Jerome Powell's last meeting as chair. His term ends May 15. Kevin Warsh is the nominee. The Senate Banking Committee votes on the same Wednesday. Now the macro layer. The Iran war pushed Brent oil to $103 last month. WTI is at $91. Both have come down 10 to 16% in the last week as markets price in a possible ceasefire. Headline CPI is at 3.3%. The Fed is expected to hold rates at this meeting. That's a 99% market-implied probability. The real question is the tone. If Powell takes a hawkish exit and signals that Iran-driven inflation is sticky, growth stocks like Micron get sold first. If he hands off to Warsh on a dovish note and the war de-escalates, the AI memory trade keeps running. Powell has used his last few meetings to protect Fed independence. This one is the last chance. 5 contradictions, 1 calendar window. A guidance number that exceeds full prior years, 2 top quants on opposite sides, a 50% HBM price hike with commodity memory still uncertain, C-suite selling under plans that locked in below today's price, and a Fed day that doubles as Powell's exit. Every one of these resolves in the next 8 weeks. The bull case wants a dovish Powell, a strong commodity memory comment on the call, and third quarter actuals printing in the upper end of the $33.5 billion range. The bear case wants any one of those to slip. The asymmetry is not in your favor on either side right now. 3 things move this stock through June. First, Powell's tone on Wednesday. Hawkish equals memory sell-off. Dovish equals continuation. Second, any Form 4 filing showing new 10b5-1 plans at higher prices. That tells you the C-suite still believes. Third, the third quarter actuals in late June. Anything below $33 billion breaks the guide. Anything above $34 billion confirms the supercycle. Track those 3 and the ambiguity collapses. Micron sits at $520 with the analysts saying buy and the smart money split down the middle. The guidance is historic. The insiders are selling. The Fed pivots Wednesday. None of these contradictions resolve until the data lands. That's the setup. Now you know what to track. If this breakdown helped, hit subscribe. We're working through the full earnings cycle. There's a lot more coming.